Welcome everybody, and in this lecture we'll discuss sections like 80E, 80EEA, 80EEB and 80G. Four sections we'll try to cover in this lecture. Now first section, what it talks about? 80E. What is 80E? 80E talks about education, E for education. So whenever you take an educational loan, you pay interest on it, correct? Whenever we take a loan, we pay interest on it. So same is the story with education loan. You pay interest on it. Whenever you pay interest, that interest is allowed as deduction under section 80E. But now the question is, to whom this section applies? This section applies to individuals only. That means no HUF, no firm, no company, nothing. Only for individual this section applies. Now that individual may be a resident, may be a non-resident, may be a citizen, may be a not a citizen. Perfectly fine. But if he is an individual, that's okay. Now, from whom he should take the loan? The answer is he should take the loan from any bank, which is actually referred under Banking Regulations Act, or any specified financial institution, or from an approved charitable trust. So please remember these words, right? Who should take the loan? Individual, irrespective of residential status or citizenship. From whom the loan should be taken? From any bank, specified financial institution, approved charitable trust. What is the purpose of the loan? Higher education. Now, what do you mean by higher education? After 12th class. That means you may take the loan for graduation, post-graduation, doctoral studies, post-doc studies. For that you can take the loan. Right? So loan may be taken for these purposes. So what did we learn? We learned that for higher education the loan can be taken. Okay. For whose higher education? For higher education of the individual himself, or for his spouse, or for the children. Children may be dependent or independent, doesn't matter, correct? But if you take the education loan for the education of children, still it's fine. Or for any person for whom you are the legal guardian. For any person for whom you are the legal guardian. If you satisfy all these conditions, that's it. If you satisfy all these conditions, that's it, I say. Okay, you are eligible for claiming the deduction. Deduction of what? Whatever interest paid, it will be allowed as deduction. Right? Whatever interest is paid, that is allowed as deduction. But from when? The answer is the initial assessment year and 7 subsequent assessment years. So totally 8 years you can get the deduction. Initial assessment year plus 7 subsequent assessment years. So 1 plus 7, 8 years. But what is initial assessment year? Initial assessment year is the year in which you start repaying the interest. In which you start repaying the interest. That is what initial assessment year is. Are you clear? Very good. Now what they wanted to tell you, that the deduction of interest is allowed either for this 1 plus 7 years, that is maximum period, or the period for which you pay interest, whichever is earlier. Right? Suppose you paid interest for 5 years only. So you will get deduction only for 5 years. If you paid interest for 10 years, then here the rule says 8 years only. So will not allow the deduction for extra years. Only up to 8 years you will claim deduction. Like that you are actually supposed to remember. So 80E, it's applicable to only individual, resident or not, citizen or not. The purpose should be education loan, and that to higher education only. Higher education means at least about 12th class. From whom you should take? Bank or financial specified financial institution or approved charitable trustee. Right? For whose purpose you should take the loan? You should take the loan for self, spouse, children, whether dependent or not, or a person who is a for whom you are the legal guardian. Right? This is how you should remember. And when you take the loan, the interest you have to pay. That interest is allowed as deduction, but rule is for first assessment year, initial assessment year plus 7 years, or the period for which you pay the interest, whichever is earlier. But what is initial assessment year? The period from when you start paying the interest. Like this, you are actually supposed to remember the things. Now let's come to section 80EEA. 80EEA talks about interest on housing loan. Let me tell you in short, this is over and above section 24B. That means you will get deduction under section 24B for interest. Above that, you can actually claim deduction here. Okay, very good. That means you claim there and here for the same amount? No. If you exhaust the limit there, you claim the deduction here. That's how the practice is. Clear? Very good. Now, this is also applicable to individual only, whether resident or not. He should have definitely taken the loan. Why the loan should be taken? For construction or acquisition of a house property. Now, he should not be in possession of any other house property, then only this benefit of 80EEA is given. But there is a period also. The loan must be taken between 1st April 2019 to 31st March 2022. And the stamp duty value of the house property shouldn't be more than 45 lakhs. Let me repeat for all of you. A 80EEA section applies to whom? Individual. He is a resident or not, doesn't matter. Right? For what purpose he should take the loan? For construction or acquisition of house property. When he should take the loan? Between 1st April 2019 to 31st March 2022. Between this period you should take. Okay. You should not be in possession of any other house property. Then only you will claim the deduction here. Right? Section 24B don't have such restrictions. Clear? Very good. And the stamp duty value of the property should not be more than 45 lakhs. So they did not tell you what should be the loan amount. They said property value should not be more than 45 lakhs. That means basically middle class, lower middle class people will be benefited out of this section. Right? This section is not for higher class people, rich people, right? Ultra rich people. This section doesn't apply. So what I wanted to tell, these conditions should be satisfied, right? Purpose, period, clear, no other house property, and stamp duty value. This, if you remember, that's it. Now, from whom you should take the loan? Any financial institution. That's also you should keep in mind. How much deduction? Whatever interest you pay, or 1,50,000, whichever is lower. Actual interest paid or 1,50,000, whichever is lower. This much deduction you can claim. But if you are claiming deduction under this section, then you cannot claim deduction under 80EE, or you cannot claim deduction under any other section. Right? Under 80EE or under any other section, you cannot claim deduction of interest. You cannot claim it under section 36 or even under section 37. Okay. So ultimate purpose is no double deduction. Now come to section EEB. We are going to discuss. It's a loan taken for purchasing an EV, and on that if you pay interest, that is allowed as deduction here. It's almost same like EEA, right? So this is also applicable to individual only, whether resident or not, doesn't matter. Correct? Second point they say, the loan may be taken from any financial institution. The purpose is to acquire an EV, electric vehicle, right? There is no monetary limit specified here that the EV price should be this much, that much, nothing like that. Okay. So you take the loan from a financial institution for purchase of an electronic vehicle, right? Don't claim deduction under any other section. Then you can claim deduction under this section. But how much deduction? That is the actual interest paid or 1,50,000, whichever is lower. Actual interest paid or 1,50,000, whichever is lower. So is this deduction applicable to petrol based and diesel based and CNG vehicles? The answer is no. Only for EV vehicles. But when the loan should be taken? Between 1st April 2019 to 31st March 2023. The loan may be taken between 1st April 2019 to 31st March 2023. In between this period, if you actually take the loan, then you can claim the deduction. Right? Deduction amount also you understood? 1,50,000 or actual interest, whichever is lower. Right? No double deduction. If you claim deduction here, then don't claim deduction under any other section. Let me repeat. Hey, section EEA talks about what? Acquisition of electric vehicle by taking a loan. So whatever related interest is there, that is deductible under this section. It's applicable to only individual, irrespective of they are resident or not. They should have taken the loan from financial institution between the period 1st April 2019 to 31st March 2023 for purchase of EV. Then they will get the deduction of 1,50,000 or actual interest, whichever is lower. No double deduction. This you keep in mind, that's it. Now come to next section, and this is very big section. That is 80G. Very important section also. We'll solve some problem on this. Okay. Now, what is 80G talking about? 80G says that you give any donation to any specified fund or to any organization. Right? If you are giving donation to any specified fund or to any organization, then you will get deduction under 80G. Clear? Very good. So, how much deduction, to whom it is applicable, we'll discuss in detail. I'll tell you, this section applies to all assets. So, there is no limit. Whether it is Reliance Industries or Ganesh Narvade, both will get deduction under 80G. So, it's applicable to all assessees. This you should keep in mind. First, now what they should give? They should give a donation to any fund, specified fund or organization. So they should give donation to any specified fund or an organization. But please remember, the donation should not be in kind. That means if you give a donation of any assets, I gave donation of my shirts which I used earlier, right? So this type of things which you give as donation in kind, they are not allowed as deduction here. That means only in cash if you give donation, that is allowed. If you make the payment of any donation, that is allowed under 80G. But what they said, cash donation cannot exceed 2,000 rupees. So properly in currency notes, if you are giving donation, it should be up to 2,000, right? If it is more than 2,000, not allowed. Up to 2,000, it's allowed. Okay. But if you give donation other than by cash, that means through account pay, check, demand draft, right? Electronic clearance system, then definitely deduction is allowed. Are you clear? Very good. Now, what they said, that to whom you should give donation? To specified fund or organization. Can it be in kind? You can give donation in kind, but it's not allowed under ATG. Can we give it in cash? If it is currency notes, up to 2000 rupees. It's allowed here. You can give donation of 10,000, 1 lakh, 10 crores also in cash, right? But deduction is allowed only up to 2000 rupees. But if you pay through account pay, check, demand draft, then definitely deduction is allowed under ATG. Now, when you give donation, you should take the certificate from that institution, right? So, if you take the certificate along with your return of income, you can submit that certificate so that you can claim deduction under ATG. Along with the return of income, if you submit the certificate, then you can claim deduction under ATG. Right? Now, deduction under ATG is given in two different categories. See, observe. Category A is given and category B is given. Now, category A says that there are two parts, A1, A2. A1 says 100% deduction without limit. A2 says 50% deduction without limit. That means, suppose I gave 1 lakh rupees donation to National Defence Fund. So entire 1 lakh will be allowed as deduction. That's what they said here in A. But suppose example, if something is covered under A2, I gave 1 lakh donation to that organization, then only 50%, that means 50,000 is allowed as deduction for me. Okay. So A1, 100% deduction without limit. A2, 50% of the donation amount is allowed as deduction without any limit. That means they are saying that there is no limit on the amount of donation which you give. You can give any amount as donation, it's your choice. Now come to category B. Category B says that you can give donation, but there is a qualifying limit. Category B says you give donation, no problem, but there is a qualifying limit. That means you cannot give any donation above the qualifying limit. Or more practically, I'll tell, you can give donation, but you will not get deduction beyond the qualifying limit. Is it right? Fine to remember, right? You give donation, who is going to stop you? But if you come to income tax department for claiming deduction, they say this is the qualifying limit beyond which we will not give deduction. Okay, this is category B. Now category B has again two parts, B1, B2. B1 says 100% deduction with qualifying limit. And B2 says 50% deduction with qualifying limit. Okay. So, we'll first decide what is qualifying limit, and your deduction under B category cannot exceed that qualifying limit. So, deduction allowed under category B or qualifying limit, whichever is lower will be allowed as deduction. That's how you should remember. Now, let us discuss category A and A1. 100% deduction, no limits. There were 17 items are there. Super fast, I'll try to help you to remember. If you can remember, it's great. If you don't remember, still no problem. Just try to connect with the words. Right? In the exam, if they give any question on this type of thing, mostly you will be able to connect with the words and identify. Okay? So basically, National Defence Fund is there. Right? A1 category, 100% deduction without limit I am talking about. Right? If you contribute, give donation to any National Defence Fund, or you give donation to National Children's Fund, you give donation to National Cultural Fund, you give donation to National Sports Development Fund, or you give donation to Clean Ganga Fund, or Swachh Bharat Kosh, or Jilla Saksharta Samiti. Are you able to understand? Right? Okay. You give donation to CM Relief Fund, or any PM Relief Fund, or PM Cares Fund, or you give donation to PM Armenia Earthquake Relief Fund, or you give donation to state government earthquake relief fund, which is set up by Maharashtra, Andhra Pradesh, or Gujarat, or you give donation to a fund set up by the state government for the relief of the poor, or you give donation to an approved university or any educational institutions of national eminence. Now, this national eminence is very important one, because you are a student. Try to study from such institutions which are of national eminence, like IITs, IIMs, at least post qualifications executive programs. You try to do from this type of institution, IIMs, IITs, in IISTs, Indian Institute of Sciences, right? These are the, like, National Foundation for Communal Harmony is there, right? Any fund setup, national fund set up for prevention of drug abuse, national fund set up for prevention of drug abuse, right? National trust, national trust set up for the welfare of persons with autism, cerebral palsy, mental retardation, or multiple disabilities. So if you give donation to any of these 17 funds or organizations, or fund set up for the army also, right? Then definitely you will be allowed 100% deduction without any limit. Chal, let me tell you again, just for the sake of recapping it. National Defense Fund, right? What I said, National Defense Fund, National Children's Fund, National Sports Development Fund, National Cultural Fund, Clean Ganga Mission, Jila Saksharta Samiti, right? Swachh Bharat Kosh, right? Chief Minister Relief Fund, Prime Minister Relief Fund, with Prime Minister Care Fund also, which is set up by Narendra Modi ji, right, during COVID, right? National Trust for the welfare of persons with autism, cerebral palsy, mental retardation, or multiple disorders, right? PM Armenia Earthquake Relief Fund, right? State fund set up by uh, state government fund for relief uh, in case of earthquake by our Gujarat or Maharashtra or our Andhra Pradesh, correct? This type of fund, or fund set up by the state government for the relief of poor, right? Any national foundation for communal harmony, university or institutions of national eminence, approved university, please remember, fund set up by the army, right? Jila Saksharta Samiti. Like that, you have to remember all the 17 items. Right? Two times I repeated, so that almost you will be able to recollect. Exam wise, don't be so serious to remember everything. Okay? Just if you have a basic idea, okay. That's it. Now, come to the second category. 50% unlimited deduction. Okay? And here only one item, and that is Prime Minister Drought Relief Fund. Only one item, Prime Minister Drought Relief Fund. Here, if you contribute 50% of your contribution, if you of your donation, you will get deduction under 80G without any qualifying limit. Okay. Now, come to that funds where there is a qualifying limit, like 100% deduction, but subject to qualifying limit. What are that items? If you are giving donation to any government, to any local authority, or to any institution which is involved, which is engaged in the promotion of family planning in India, or the promotion of family planning in India. Second, if any company, now the first donation which I discussed is for all assessees, but this company donation which I said, no, second point, only applicable for companies. So if a company is giving donation to Indian Olympic Association, who is giving donation? Company is giving donation to Indian Olympic Association or any institution, or any institution, Indian Olympic Association or any institution. Are you able to connect it? For the working for the development of the infrastructure of sports in India. Right? This is how you have to remember. Right? Next thing. Now what they said, 50% reduction they said with qualifying limit. Here four items are there. Right? 100% deduction with qualifying limit, only two items. Right? One, central government, state government, local authority or any institution engaged in promotion of family planning in India. To them you are giving donation. Second, company giving donation to Indian Olympic Association or institution working in the development of infrastructure of sports in India. Only these two items in 100% deduction with qualifying limit, restricted by a qualifying limit. Okay. 50% deduction restricted by qualifying limit has four items to remember. What are they? If you are giving any donation to Housing Development Authority, or you are giving donation to any temple, masjid, gurudwara for renovation and repair, or you are giving donation to a public charitable trust, or you are giving donation for the welfare of minority community in India. You are giving donation for welfare of minority community in India. What does this mean? Dekho, minority means the community, whole community, people in India together cannot exceed or not more than 2%. Like example, Parsis in India, not more than 2%. Jews in India are not more than 2%. Jains in India, right? So these type of communities are actually minority communities. Okay, this way you have to understand. So what I said, 50% deduction with restricted by qualifying limit. So whom you are giving donation? Housing Development Authority, right? Temple, Gurudwara, Mosque for repair and renovation, or you are giving donation to Public Charitable Trust, or for the promotion of minority community in India. And what is the definition of minority community? Whose population in India is not more than 2%. That's why I gave the example of Parsi, right? Jain, right? Jews, correct? Like this, you are supposed to remember. Now, I said restricted by qualifying limit. So, what is the qualifying limit? The limit is 10% of the adjusted total income. What is the limit? Tell me. 10% of the adjusted total income. Limit is 10% of the adjusted total income. Limit is 10% of the adjusted total income. Now, what is adjusted total income? Dekho, you do the total of salary, house property, PGAP, capital gain, other sources, you get gross total income. So, adjusted total income is gross total income only. But from that, gross total income minus, we have to deduct long-term capital gain. So, gross total income minus long-term capital gain minus short-term capital gain under 111A section. Deductions under 80C to 80U other than 80G. What I said? Deductions from 80C to 80U other than 80G. And finally, any income which is specified under section 115A, 115AB, 115AC, etc. So if you deduct these things, then you will get adjusted total income. Once you get adjusted total income, multiply it with 10%. And that is the qualifying limit, right? So B1 plus B2 cannot be more than qualifying limit. That means either the qualifying limit or B1 plus B2, whichever is lower, allowed as deduction. Are you able to understand? Okay. Now, adjusted total income, repeat it again. Repeating, no problem. Take gross total income. Very simple. From that, deduct long-term capital gain, whether it is 112A or 112, no problem. Deduct both. Deduct short-term capital gain only under 111A. Right? Other short-term capital gain, no need to deduct it. Only short-term capital gain under 111A deducted. Right? Then deduct 80C to 80U deductions other than 80G. 80C to 80U deduction other than 80G. Right? Because 80G we are computing here, correct? That's why. Then deduct something called as 115A income, 115AB, AC incomes. Then you get adjusted total. Multiply it with 10%. Then you will get the qualifying limit. Then compare it with B1 plus B2. Whichever is lower, claim it as deduction. And here they did not talk about casual incomes. So that means casual incomes are considered as income under adjusted total income. Okay, no problem. Correct. Now, what is the deduction under 80G? Now I'll tell you. 80G says deduction is 100% deduction in A1 plus 50% deduction in A2 of the donations, plus after doing these two additions, we'll add B1, B2 category subject to qualifying limit. When we total all these things, you will get deduction under 80G. This is how you are supposed to remember the entire topic. When we solve the problems, now you will get that ultimate confidence. Okay, so don't worry, right? And we'll meet in the next lecture. Till then, take care. Bye, everybody.